Jeff Pierce is here, Senior Manager, Derivatives Trading, Charles Schwab. Glad to see you this morning, Jeff. Tell me some of the things that are standing out to you.
Well, obviously, again, like you pointed out, we're seeing the market tick up a little bit today. I think still some hopes that at least discussions might be had between the U.S. and China. Of course, it's not all good news. We did have some data come out from existing home sales that they actually slipped 5.9% in March to a seasonally adjusted annual rate of 4.02 million. Sales slowed about 2.4% on a year-over-year basis. Coming into this report, expectations were about 4.13 million in existing home sales for March, and for existing home sales month over month to be down just about 3%. If we look at some of the details in here, median home existing sales price climbed about 2.7% from March of 2024, an all-time high for the month of March. Also, the 21st consecutive month of year-over-year increases. Inventories of unsold existing homes jumped about 8.1%. We're starting to see that supply of unsold homes is coming back, which can in some ways be a good thing for the buyer and seller market. But home buying, according to the chief economist at the NAR, says home buying and selling remained sluggish in March due to the affordability challenges, as well as the higher mortgage rates. They said residential housing mobility currently is at historical lows, signaling a troublesome possibility of less economic mobility for society.
It's interesting because when we saw new home sales, that looked a little better. That has been the story, of course, and the home builders are also able to spread out the mortgages. They sort of maneuver and massage those mortgages a bit. They have some leeway with that. But new home sales have been doing better than existing home sales. But this existing home sales really shows the weakness and the worries. You mentioned some of them, just fewer people there, mortgage apps dropping, economic uncertainty, housing costs. I guess people are just nervous to take a move.
They're certainly nervous to take a move. To your point, new home sales data has been a bit surprising, especially given the headwinds for buyers nationwide. There's a couple of factors at play. New home sales, we're not worrying about the old homeowner that doesn't want to get out of their current interest rate. That's been a big issue in terms of supply out there. The other part is what we're seeing in new home sales is a lot of the more luxury pricing is where we're seeing those sales numbers come from. To your point, we saw that data come out this week as well. A modest decline in mortgage rates, I think, really kind of pushed that inventory to sell in March, and home builders are continuing to see uncertainty in the market. But that said, new single-family homes increased by 7.4% in February. That number was 6% higher than March of 2024. Again, we're seeing a lot of that come from some of the higher-end houses, the more expensive ones out there. But we are seeing first-time home buyers come back a little bit inside of that new home sales group. So that is encouraging. But for now, the existing home sales continue to struggle with the interest rates and not wanting to get out of your current mortgage.
So we're watching Intel, Jeff. I know you have your eye on Intel. We're waiting on earnings from this company, which also announced that they're going to be slashing staff. Tell me a little bit about the Intel story and what you're watching when this earnings breaks.
Yeah, I think that this report, certainly the numbers are going to matter, but a lot of this report is going to hinge on the new CEO and what the plans are going forward. Just to look at the numbers quickly, expectations on earnings are about a penny, revenue about $12.32 billion. That would be down 3% year over year. If we look at net income, that's expected to decline more than 90% year over year at about $56 million. Currently, the view for revenue in their client segment, which is that PC business, is that we're going to see a decline there. Client computing is forecasted to fall by about 9% to $6.9 billion. Data center revenue expected to be down as well, about 3% to $2.9 billion. And then Foundry is set to come in around $4.3 billion, just under the 4.36 we saw last year. So investors are going to be wanting to know about the Foundry business, which they've really been trying to turn that business around. They're going to want to see, too, is there a pickup from these tariffs from this quarterly report? We actually might see that. We might see people trying to get in these PC processors ahead of the tariffs beginning. Also, third-party data that we've seen out of the INTC earlier this month suggests that there was about a 4.9% rise in overall PC shipments during the first quarter.
When we think about the landscape of all these names, there was an analyst saying that Taiwan Semi, ASML, may win the chip war, says an expert, but NVIDIA and Intel could feel the heat from the Trump tariffs. Yeah, I think so. That's definitely something that everybody's watching for, and that the outlook could be somewhat muddled because of it.
Yeah, I mean, Intel has a very specific set of issues that they're working on in the world of tariffs and licensing requirement. To your point, though, they are certainly at risk. They do produce the bulk of their chips here in the U.S. Still, they are susceptible to those tariffs on laptops and other things in China. Even though they're exempt from tariffs right now on the laptop front, we expect that tariffs will be reintroduced on those in the future. And of course, they've got some restrictions on exports as well that could put pressure on them. But China's put tariffs on U.S. imports as well. These are all things that are going to put pressure on them. I think we've watched the CEO already. There's rumors of layoffs. We know that they're selling parts of Altera, which they acquired a while back. Really trying to turn around the story, and it looks like they're going to have to do it as an individual company because some of the rumors of these joint ventures seem to really be losing steam.
Yeah. All right. Jeff, it's great to see you. You have a big picture thought, quickly?
Big picture, I think, if we're looking at the overall market, it's going to still be more news around China and the U.S. Even though we've seen China kind of come back and say negotiations are not really happening, certainly a deal has not come close. At least it seems like these two countries are now talking. If we hear more positive news around that, great. If we see something else similar to what we saw from the Fed and the White House over the last week, something like that could spark more uncertainty. So keep your eye out, especially if you're, starting to see some optimism out there. Be sure to, keep your eye on any commentary.
Jeff Pierce, thank you. Joe Tigay is here, portfolio manager, with us right now of the Rational Equity Armor Fund. So you have an example trade for us on Intel. Some of your thoughts.
Yeah, kind of cautious optimism here for Intel. I've been following Intel for a long time. Just recently, ever since they had that big sell-off, kind of bottomed out around 17. Seems like there's a floor on the downside here for Intel because there's a lot going for it long term. The parts of Intel, if you broke it up, would be very valuable by itself. I think there's some optimism for the future around the new leadership, but that was just Jeff gave us a lot of reasons to hate Intel right here. Just all of the story, just the revenue coming down. We're cutting back on our jobs. Just a lot of things going wrong. We got the trade war going against them. But for me, I want to see this new CEO. I want to see his new leadership. I want to see them outline a plan. Now, it's told that they're going to be the largest foundry by 5 years from now. So that could be, just part of the plan. Tell me what's going to happen. Tell me how they're going to make all these chips going forward. I want to hear the vision for them. And I don't expect a lot this quarter, but it's really about the future for me. What's going to happen 3 to 5 years from now? I'm going to give them some leeway with this new CEO, and I think the market's willing to do so too, just given how it's kind of stabilized here around this 20. So that's how my trade, Nicole, is designed. Willing to buy it if it dips below 20. I want to own it if it does have a snap to the upside here. So just looking out to May, going to sell the May 20 put, buy the 22-25 call spread, not expecting it to race higher back up to all-time highs or past 25 by the end of May expiration. But I think it's just a cheap way for me to get into the name, play it to the long side, and be ready to buy it if it pulls back, but have participation on an up move.
Right, understood. I mean, Lip Bhutan, the new CEO, people want to hear what they have to say for the company. But some of the analysts noting that while there may be a little upside, and you said people maybe could be cautiously optimistic, it's just hard to say buy the stock for a pull forward narrative because it's hard to anticipate that in a big way because of the economic uncertainty and all the tariffs and lack of clarity with that. What's your big picture thought on the market action?
Yeah, I think it's been a pretty good week for the market action. We got the rumors of maybe a softening on the trade stance earlier in the week. Maybe a little bit of a pullback because these rumors were still rumors. We're just waiting for actual news. I think it's good action today. Still kind of waiting for it. But again, I think the market needs a headline. I think the market needs a deal, some reason beyond the rumors to actually pull forward. The market kind of wants the good news. The market's looking for the reason to snap back. I think the market just actually needs to see it rather than just a rumor. There's a lot of other things that can happen too. There's a Fed, potentially a Fed doing something. I think that could be beneficial, of course, to the market. A tax deal, a budget that's passed. I think the market would be excited about that. But we still are all just in the rumor phase. There's no action yet. I think until we get the actual headlines, which actual facts, the market's kind of waiting in limbo. That said, I think the market is ready, poised for a rally, but it could be disappointed, and we might go south again too.
Poised for the rally. There's a lot of cash on the sidelines, a lot of folks who want to put some money to work, even had people who were buying the dips and they're waiting for the nice rips. I mean, we'll see. Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Thank you.